Hello, welcome to Let's Make a Profit podcast. My name is Rebecca Howell. I'm the owner and operator of Custom Bookkeeping and Accounting Solutions. I'm also an enrolled agent with the IRS and a certified Profit First professional. So I'm kind of well-rounded in the bookkeeping and accounting and cash flow management, and that's a lot of what we're going to talk about today. Really, this podcast was designed to be informational, first and foremost on Profit First, because it's really what I'm kind of passionate about at this point. I've been doing bookkeeping for the last 20 years, and it's been a great business. I've been a tax preparer since 2013, and Profit First was just kind of the next little nugget of service that I could provide for my clients, and I was just really interested in attaching it and growing and getting as much knowledge as I possibly could. So really, this podcast was more designed around Profit First, but I also understood that as a bookkeeper and an accountant, that a lot of times clients don't understand their financials or really understanding how to read those, how to be better business people. U.S. Bank statistics states that 83% of all small businesses run paycheck to paycheck, or check to check. It doesn't even have to be paycheck to paycheck, but and a lot of people, a lot of small businesses, possibly in debt. And if you can get a really good handle on your financials and your cash flow and understanding how that all works together and how to understand it and read it, you hopefully can learn to eradicate your poverty and your debt. So that's a lot of the reasons why I'm here. But I'm going to take a second real quick before I get into the guts of today and thank my sponsors, Doctors Bo and Jamie Mullen and their staff at Harbor Life Chiropractic. They want to help you in unleashing your health potential. Tim and Sadie Marlowe at BD Local Podcast Studio, thanks for making our podcast great and helping us really share this message. Roger Sargent with Affluence Business Solutions, helping the small business owner and their teams with their business development and leadership skills. So one of the things that I also, I've said in my openings in the previous podcast is really owning your financials and understanding your importance of understanding your financials and truly owning them. And I'll get into a little bit more details of what I mean by owning them, and letting those financial statements help you in your business, but also helping you to make decisions that are going to affect your business long-term effects. So, as I stated, I've been a bookkeeper for 20 plus years, an accountant. It kind of comes natural for me to understand the numbers and understand how they affect everyone and everyone's business. But I also understand that having conversations with clients and other business professionals, that this is not the case for everyone. I mean, a lot of people are afraid of numbers, afraid of their financials, afraid of the bookkeeping side of their business. So I'm really going to dive into this, and my next few podcasts are going to be really, like I said, diving into these financials. And I'm going to explain each financial, their importance, what you need to understand from them, and how you can learn from them and grow. So as I have been kind of doing research on how I wanted to approach this, one of the benefits that I have is, and I've had several other people, business professionals, and even my clients will explain to me that I have a nice way of explaining it in language that can be understood. Some people, a lot of clients will they get confused or they get frustrated, like your CPA or your accountant, people, and this I think happens with anybody that has some real business knowledge and experience in their field, that sometimes they have a tendency to talk over people. And they don't understand that their language, their lingo that they use may not be understood by all. And I have, like I said, I've been told that I have a good way of explaining this. But as I stated, my research, and I'm always looking for new knowledge. I'm always looking for maybe new ways that I can expand my brain. How can I explain things better? And I happened to come across an awesome book, and I would highly recommend business owners get a hold of this book. And I'm going to be using some of my information in my podcast from this book, so I do have to give credit to the author. But the book is called Accounting for the Number Phobic, a survival guide for small business owners. This book was written by Dawn Fotopoulos, and I may completely butcher her last name, and I apologize. But she has taken this book, Accounting for the Number Phobic, and has a nice way of explaining the different financial statements, how they affect you, how they, the information that they show, what you need to do with them, how often you need to pull them, how often you need to read them, what is, the whole process. But she has a nice way of giving it a little bit of a spin on she's got a wit. There's a nice little funny undertone characteristic there. And that's why I think I was drawn to this book, because the way she explains some things, I was like, oh, this is awesome. I love it. And I think that, sharing this information with you, I think it'll make a little bit more sense. And I found it quite interesting, a simpler way to possibly be able to share this information and explain the financials a little bit better. So I'm going to ask a couple questions, and you can sit and think about how you feel about this. So if someone mentions to you financial statements, how do you feel? How does it make you feel? There's so many different things that go through people's minds when they think about this. A couple of them, I hate numbers. They hate me. But you don't have to be in that situation if we can help you understand these a little bit better. Some people say, that's my accountant's problem, not mine. And this goes back to where I say owning your financials. So we're going to get into this a little bit more. If I work hard enough, the numbers are going to figure themselves out. They'll work themselves out. Not the case. Here, let me see here. I'm getting. They can be intimidating to people, but again, like I said, I'm going to try a little bit simpler way. So some bankers, consultants, accountants, anybody kind of in that financial industry will tell you that businesses fail, small businesses fail, due to management ignorance, not undercapitalization. So you don't have to think that because you don't have the money, you got to go find the cash flow, you got to go find the investor, you got to go find the loan. That's not always the case. It's really understanding how your money comes in and how your money goes out and managing that better. So here's a statistic. 20% of all small businesses will fail in the first year. And it goes back to that management ignorance, because a lot of small businesses in their first year don't take on large amounts of debt. It's just because they truly don't understand what they're getting into, and they truly don't understand how to read those financials and know whether their business is doing what it needs to do or not do. 50% will fail after 5 years. 70% will fail after 10 years. And the reason those 70% after 10 years fails, because they didn't manage their cash flow. And we're going to get into a little bit more details on that. So many business owners will assume that the numbers and financials are their accountant's problem, as I stated, and bury their heads in the sand when it comes to looking at them. You cannot be an ostrich in your business and expect it to survive. Our job as bookkeepers and accountants, we're there to manage the metrics, manage the numbers, help get them in the right place, and understand the operations and the health. But we're not there to manage your business for you. We're there to be your support, to be your advocate, be your advisor on how to understand these. So in the book, Don refers to accountants and bookkeepers as the same as your car mechanic. Your mechanic is not going to drive your car for you. You drive your car. you also understand that there are certain things in your car that make it work and certain things that make it run, and you have to pay attention to those things. Your business is no different. So she uses a great analogy in the book, and this is why I said there's a little bit of wit and things that I want to share with you. So she looks at the three main financials as the three main gauges in your car. And I actually made a copy of a little insert that she did on in the book. And she explains that your income statement, if you look at it like your speedometer, your cash flow statement is your gas gauge, and your balance sheet is your oil pressure gauge. These are all three major gauges in your car that make it's important. Your speedometer, you have to pay attention to that or you get a ticket. You don't pay attention to your gas, you're going to end up on the side of the road, stranded. Your oil pressure, if you don't maintain your oil pressure and look at that regularly, or, just know that it has to be maintained, your car's going to blow up. These same things, if you look at these in the same reference that you look at in your car, your financial statements are going to make a lot more sense to you. So we're going to go into this a little bit more in depth, and I'll make sure to add this to the references on the podcast website so that you guys can always go back and look at that. So I know that this might sound funny, but this is why I found this quite interesting, because it was an aha moment even for me, going, that's a nice little analogy, and I've put two and two together to make it hopefully mean that, hey, we don't need to be afraid of these, but we can look at them a little bit differently and understand what their importance are. So, okay. So what I'm going to do is I'm going to kind of spend a little bit of time on each one of these financial statements. And I'm going to briefly go into these because, like I said, through these next few podcasts, we're going to concentrate on each one of them a little bit more in detail and really how they affect. So the first one, the income statement, can also be known as a profit and loss statement, short lingo P&L report. Dawn explains it, as I said, as your speedometer. So telling you to maintain healthy momentum, healthy speed, healthy momentum. This report it presents the entity's revenue and expenses resulting in net income or net loss. A P&L report for a specific, it's a run on a specific span of time. And what I mean by that is it covers 1 year. And that depends on if you're a calendar year or you're a fiscal year. And what I mean by that is if your financials end on any other calendar end month than December, makes it a fiscal year. But it is a 1-year statement, and you should look at these P&Ls reports monthly, and preferably after your accountant and your bookkeeper have finished up your reconciliation for each month. Some small companies will run these reports on cash basis, and there is some restrictions to cash basis, and like I said, I will get into a little bit more detail. But you have a cash basis reporting or you have accrual basis reporting. Cash basis reporting is when income is received and expenses are paid. Accrual basis is income and expenses as they are entered, the date that they are entered. So you might have an invoice that's due January 1st, but you don't get paid, or let me rephrase that. You might have an invoice that's dated for December 25th, but you're not going to get paid in January of the next year. It's going to be reported in December of that current year. So that's what I mean, the difference between cash and accrual. Cash is when you receive it. Accrual is when you enter it, not necessarily if it's been paid or not. So a lot of the questions that, and if you go back and listen to any of my Profit First podcast, you're going to see a lot of correlations between my questions that I'm going to ask you today about your profit and loss statement. And they're the profit and loss, the balance sheet, the cash flow statement, you're going to find a lot of crossover between this conversation about your financial statements and Profit First. So here's some questions I'm going to ask, and My papers don't ever want to cooperate with me. And the only reason I use these is because I have so much information to share, and it's hard for this brain to keep up, so I apologize. So, is your business making money? Can you answer that question? Have you priced your products and or services correctly as to not cheat yourself out of your profits, but also staying in line with your competitors? Do you know what your competitors are doing? Are your profit margins within reason to afford your business, but also not outprice yourself? Do you have the right mix of clients? If you're a service-based business and you service a lot of different clients, you want to make sure that you don't have any ones that are too big, because if you lose them, you lose everything. Or you don't want them to be too small that you have so many small ones that you're not making enough money. So you have to look at a good mix of your clients. Okay, so the next one, statement of cash flow. This is statement of cash flow statement. I mean, there's a couple different ways that you look at this. Oh, and another thing, if you're a nonprofit, I forgot to mention this, but a profit and loss statement can also be a statement of activity. So cash flow statements shows the movement of your cash in your company. Cash flows in as receipts, income, cash flows out as expenses. As your income statement, as I stated that was a 1-year time span, your cash flow statement is also a 1-year time span. And it represents, again, either a calendar year or a fiscal year. Cash flow statements classify 3 activities. There is an operating portion of it, an investing portion, and a financing portion. Operating expenses or activities refer to current assets and current liabilities, receivables, inventory, payables, as you may know those. Investing activities, where your company puts its money for long-term purposes, investing in property or equipment. So this is not necessarily liquid cash, but you are investing in buildings, assets, property, equipment. So those are investing activities. Financing activities, where the company gets its funds outside of its revenue. So that you need to make sure that those are 2 separate things. So this could be bank loans, investors, owner's capital, any money that's come from you personally to support your business. So as I go back to this little handy dandy thing, the gas gauge. That's what Dawn explains your cash flow statement is. So you need to measure your cash and not guess on it. Because if you guess, just like your gas gauge, you're going to run out. She says that you don't need someone to tell you that you need to go buy gas. You just know that you need to buy gas the closer it gets down to E. And one of the things that I absolutely loved in the book that she said was guessing on your cash in your business is like driving in the HOV lane to bankruptcy, because you really need to understand how your money flows in and how your money flows out. Because if you can't manage your cash flow, you're guessing on your money. And then you're going to be part of that business statistic that fails in their first year, their 5th year, or their 10th. This cash flow restatement should really be looked at weekly. And you can get into where you don't have to look at it as often. But when you first start your business or you're first starting to understand your financials, I certainly recommend looking at it weekly, because then that's when you truly start understanding how your money comes in, how your money goes out. So again, as I stated, a lot of my cash flow statement questions to you are going to be very similar to Profit First. Does your business have enough cash to pay your bills? And also the most important person in your business, you. We talk about Profit First, making sure that we take care of you as the business owner, and we also manage operating expenses. That's all that Profit First is. So the cash flow statement is very similar to that. What expenses can you reduce, and what goals are most important to you or critical to the success of your business? How do you plan for your business or personal needs during lean months? Reserves and cash flow. If you can figure out how to manage reserving cash, you can also help manage your business and your personal needs during lean times. Do you need a line of credit? And how do you best manage this? A lot of people will understand, and I'm going to get into this a little bit more with the balance sheet, but you need to be careful with the amount of debt that you have, because it's not always the right amount of debt, or it's not the right debt for your business. So next, we're going to talk about the balance sheet, also known as a statement of financial position. So profit and loss statement of activity. This is the statement of financial position. This is what she references, like I said, Dawn references as the oil pressure gauge. This statement is important to help you not crash or end up in a ditch with your business. So that's why the oil pressure is important, because if you don't take care of that, that's how you're going to end up in your car. That's how you end up in your business if you don't manage it. So the balance sheet, and again, why this is the financial position. This is the report that your bankers and lenders are going to be most interested in, is this statement. It represents the company's assets, liabilities, and capital. So very similar to the cash flow statement. But what this does is it states what your business owes and what it owns. So there's the difference between owning the assets, owning the inventory, owning the things that you invested in versus what it owes for the loans, the line of credits, the payables. So you will see, and the final part of this is that it shows the company's net worth. And the net worth of your company is basically your company's capital. I call it skin in the game. It's what your company has. So you have positive net worth if your company owns more than it owes. And that's what every business needs to work for, is positive net worth, is understanding that your business needs to own more than it owes. And that goes back to, again, that managing that cash flow, trying to get you out of debt, eradicating your entrepreneurial poverty. All of these things kind of work themselves together. Positive net worth is the key that you want to achieve. Banks are most attractive if you present your financial statements this way. If you have positive net worth, your banker is going to look at you completely different than if you are the other way around and have negative net worth. Also, too, positive net worth. If you're getting towards the end of your career, or your long-term goal is to sell this business in someday, you almost have to guarantee that you are in positive net worth to sell this business. If you're the other way around, people don't want your baggage. And that's exactly what I'm going to call it. So driving down your liabilities, again, is making sure that your business does not take on more debt than it needs. Understand that a line of credit can be very useful for a business, and I think all businesses should have it, but you need to understand what a line of credit is and make sure that you use it correctly. And a lot of like the PPPs and all this stuff that we're dealing with, I'm not saying that that's not good debt, because we're hoping for forgiveness and everything of that nature, but we also need to be careful of other loan opportunities that people are offering right now that they may not be the best decision for your business. Because if you can't manage your debt and your liabilities of whatever those may be, and they're really ultimately the same thing, that at some point in time you can get past the point of no return. Your business owes too much and you're never going to get out from under it. And nobody wants to hear that, because that's why these businesses fail, is that they get past that point of return and they give up. They lose their why, they lose their drive, they lose their enjoyment of their business, and they just say, you know what, it's just not worth it anymore. And nobody wants to get to that point, but obviously it does, or these statistics wouldn't be here. So you need to take the time and invest in your business and understanding that these financial statements are key to your success and to your business growth. So balance sheet can also be run on a cash basis, an accrual basis. Unlike your profit and loss report or your cash flow, this report is run at a date and time. So what I mean by that is you can run your balance sheet as of 10/31. You can run it as 11/15. You can run it as 12/1. So whatever your financial position is as of that date, that's what that report tells you. This is a rolling report. The day you start your business till the day you close your business, your balance sheet is always going to show your financial position as of a certain date. So keep that in mind, that's how you're working to create this positive cash flow is that your balance sheet continually runs and rolls year after year. So some questions to ask yourself on a balance sheet. Does your business have cash to support your profits? You've heard that in my Profit First. How can we help you to have the cash to understand to support your profits? People have profits. They look at their bank account and go, how? How can I have a $45,000 profit and I only have, $5,000 or $6,000 sitting in my bank account? There's no way I made that much money. Well, you don't understand how much of that profit you took to pay your liabilities or pay yourself. So understanding and managing your profit first and your cash flow, it's key to this whole thing. Does your business have too much debt? Again, I go back to that. Does your business have the right kind of debt? Does your business have too much or too little inventory? This is another thing that I talk about when I'm working with a Profit First professional is understanding cash flow. If you have inventory, you'll understand this, but people with inventory have a tremendous amount of cash flow tied up in inventory. If they don't manage their inventory correctly, you go by, you have it in your truck, you have it in your garage, you have it. And if you're not organizing your inventory, all you're doing is wasting money because you drove down to Home Depot or Lowe's and you bought the stuff because you needed it for that job. And then you realize, oh, crap, I've already got this stuff. There's so much money tied up in inventory that some people don't pay attention to. So how much working capital? Again, going back to that net profit, that net worth, how much capital does your company have? As a tax preparer, and I have these conversations and I hate having them, but I have to. When somebody takes out more money in their business than their business is making, you have a capital gains issue. You have to pay taxes on the money that you are taking out of your business above and beyond your profits. And I have to tell people sometimes you have to make a profit to get out of this. You have to show a profit. And then you end up, if you have a loss or depreciation or things that you get benefits on your tax return, if you're not managing your cash flow correctly, it affects on how you pay your taxes. I know everybody says, "Oh, I don't want to show as much profit." Sometimes you have to, because the taxes on the profit are way less than the taxes on the capital gains. But you have to understand how these things work. So I'm going to do a quick recap, and like I said, I'm going into a lot more detail on these financial statements through these next few podcasts. So the net income statement reveals if your business is making profit, breaking even, or at a loss. Reviewing this report monthly, you can also review it quarterly. Quarterly can sometimes show you profits during fluctuating months or seasonal changes. So understanding if you look at those quarterly and if you can run, month by month by month, and that's something I do with my cash flow is kicking it out to an Excel spreadsheet and comparing January, February, March, and looking at each one of those months and understanding, did you have ups and downs, and understanding why did we have those ups? Why did we have those downs? Can we manage them a little bit better? Cash flow statement shows the inflows and outflows of your cash from operations. This statement will help you understand if your business can sustain itself without adding additional cash. So that's again, capital, bank loans, investors. Can you manage your business without looking for outside sources? Balance sheet is a snapshot of the health of your business at a moment in time. What your business owns, cash, assets, inventory, what the business owes, payables and liabilities. Assets minus liabilities equal net worth. And again, we're trying to work for positive worth. So if you have more assets than you have liabilities, you're in positive net worth. So that's really the ultimate goal that you're trying to work for. So that is my podcast today on cash flow statement, profit and loss statement, balance sheet. Again, remember your speedometer, your gas gauge, your oil pressure. These are important to your car. They're important to your business. Thank you for listening today. You can find any of these podcasts on letsmakeaprofitpodcast.com. You can also reach out to me at Rebecca, your custom bookkeeper, or 253-514-8564. Thank you for listening and have a great day.